Welcome everyone. I am Tracy Lee. I'm the operations lead for the UK South Africa Tech Hub. I just want to thank you all for joining us today at the webinar hosted by the South African Startup Movement, where we're going to be discussing exchange controls. Just thank you for joining us. I'm sure more people will be entering the room as we go along, but conscious of everyone's time, so let's get the day started, or the webinar started. As I mentioned, I'm from the UK South Africa Tech Hub. We have been supporting this initiative for quite a while now. It's an area that we really are focusing on. We believe there's a lot of change that can happen in the ecosystem around reform around the policy and red tape that the Startup Back movement is addressing. Just to give you a bit of background, the South African Tech Hub is the UK South Africa Tech Hub is an initiative of the UK government. We are looking at how we can support the wider tech entrepreneur ecosystem so we can enable economic development in the country. And that is part of the reason why we focused in on policy to see how we can aid the space to really make a change in the ecosystem. I'm going to hand over to Alison, who's been ready for making the time to join us. And I'm looking forward to the discussion. I really do encourage everyone to please put their thoughts and views in the chats. We'd love to hear as we go through the panel discussion how your experiences in the market. Thank you, everyone, and I'm going to hand over to Alison.
Great, thanks, Tracy Lee, and hi, everyone. Alison Collier. I head up the Endeavour team here in South Africa. Endeavour is a global organization based out of New York, and we're here to support and accelerate the growth of high-growth entrepreneurs from emerging markets around the world to accelerate the growth in the economy. So very much in line with what you heard from Tracy Lee from the UK SA Tech Hub. So just a quick introduction to the guys on the panel. So Adrian Dommisse, who's the director and founder of Dommisse Attorneys. So great to have you here, and day in and day out, he and his team is working with South Africa startups and scale-ups and supporting them expanding their businesses overseas, particularly on the structuring side, the legal structuring, and how best to navigate our legislation in South Africa to successfully grow their businesses internationally. Then Brian, who is the commercialization executive of TIA. So also wonderful to have the South Africa government in the room, and also your team support on investing in really early stage startups through the new fund that you've established at TIA. Also your work together with the SME fund in the space. It's great to see that initiative, us sort of putting all of our resources in one place to work more effectively together. And really looking forward to hearing some of the examples of the entrepreneurs you're working with and supporting today to assist them with growing and expanding internationally. And then last but not least, Bubu, who's the founder and CEO of JoBox. So for those of you that don't know JoBox, it's a fantastic platform to support graduates and university students who are looking to be placed into various businesses, both here in South Africa and elsewhere. But it's exceptional to see the growth of your business over the past few years. And I think Bubu's got a few war stories and also ideas to share with us as he and his team navigated raising capital from the international markets and what that meant given our exchange controls. So just immediately to kick it off, Adrian, I wanted to ask if you could sort of set the scene for us and talk through just what our South African startups need to really bear in mind as they're setting up on their growth journey to expand internationally, given our legislation here.
Thank you for the kind introduction, Alison, with pleasure. So context is South African startups, our law firm helps them to raise cash. We're venture capital law firms at heart, and we know that there's much more investment cash offshore than in South Africa. The challenge with exchange controls, they exist to restrict the inwards and outwards movement of currency into and out of South Africa. It's a legacy thing. We can go into why it exists and how unjust it is, but that's the reality. The problem is that it's contrary to the free market principles, and investors who live in that free market are wary to invest into South African companies directly. But there are also other reasons. They see all sorts of noise in the news, social, political, economic risks. They don't follow rugby, they don't follow cricket, they don't realize how amazing we are. So startups have to absolutely raise cash through offshore vehicles set up for that purpose. So an offshore company set up for that purpose. And that that in itself starts to create the complications. So exchange controls allow South African tech startups to set up an offshore holding company for the purpose of raising funding. But for that holding company to be a holding company, to own the South African company, it has to buy the South African company at fair market value and for cash, which is an awkward discussion with an investor. Can you please fund the purchase of my own company? It's as crazy as it sounds. The second element is that once that's purchased, the South African shareholders, you aren't actually receiving that cash. That cash has got to go straight back offshore. They have to pay capital gains tax and that sale amount. And the third point is that the whole point of having the offshore holding company is that the investor is going to see the heartbeat of this company being the IP that's created by the South African operations. And they're going to say, please make sure that IP is owned in this offshore holding company, which is going to be holding all my cash. And exchange control prohibits that transfer outright. So we've got to build in IP strategies. We've got to place human resources in the offshore country in order to implement future IP anchored over there. So this is a lot of hoops to jump through for a startup company that just wants to raise money and get cracking on. So that's the challenge we have to overcome, and that's the challenge that the SA Startup Act steering committee has been lobbying government with to try and resolve. Back to you, Alison.
Yeah, thanks so much, Adrian. Great. And I want to say we'll get into what this actually means and a couple of examples a little bit later. But before getting into that, Brian, I just wanted to ask you, when you look at this from TIA's perspective, like when do you as TIA start working with the entrepreneurs in that growth cycle as they're looking to expand their business and raise capital from the offshore markets? What role does TIA have in that process? Do you as TIA link them up to, individuals like Adrian and other legal advisors, or do you as TIA get involved with that piece of work directly?
Right. Thanks, Alison, for the kind introduction. And as the TIA, we are nothing more than a technology development finance house. And I'm going to speak to what we represent. We're fully responsible for the investment lifecycle management, which simply means that we get involved at a proof of concept phase of these brilliant ideas, long before technical viability is actually completed or proven, long before commercial certainty is demonstrable. So we are the idiots that come in early and believe in the dreams. And we do this by deploying both financial resources. We've got a whole range of financial instruments that we deploy, but most importantly, we bring our proximity to the financial capital markets. We bring our proximity to the industrial markets to the benefit of startups that we fund. We identify companies like Dropbox. I'm proud to be sharing a panel with one of my investees in my portfolio, Dropbox, where we really invest in them, support them, and help them go to market. In a nutshell, that's what we do as a TIA. We carry them through the innovation lifecycle management. Thank you.
No, excellent. Thanks so much. And I just sort of want to say, on behalf of us as a Startup Act community, to the Department of Science and Innovation, which is the area where you and your TIA team resides within government, you've given us so much support in the conversations, together with the small Department of Small Business Development, towards National Treasury to move these pieces of legislation. So it's wonderful to be working with you. Thanks so much, and also to your colleagues in the broader Department of Science and Innovation. So then, Bubu, over to you. Like when you were looking to grow your business, I mean, one, fantastic, you got support at an early stage from TIA. That's excellent. And then, of course, as your business grows, you need to raise more capital to finance that growth. So just tell us a little bit about your experience and like where in your capital raising cycle you came across the exchange control issues, and then how you and your team solved it and how you navigated those.
Yeah, no worries. Again, thanks so much for inviting me. It's always a real pleasure to talk on this panel and to just give some insights, and hopefully the work that we do on this panel and the work that you guys are doing on the Startup Act panel is just really going to assist us in getting this thing over the line. So while fundraising, firstly, as a startup is incredibly difficult, it is one of the most arduous journeys that you can take. And at the point when we were wanting to really grow our business, we actually decided, hey guys, let's go raise some funding from outside South Africa. Why did we decide to do that? Well, Unfortunately, there just isn't as much funding available in South Africa as we would like to have. And the global market just presented a great opportunity. And I had the benefit of having spent some time in Japan with another startup that I tried to do. Unfortunately, it crashed and burned. But the relationships that I made there were long lasting. And so by the time I was doing Jobbox, I said to the guys, hey, I'm doing another startup. Would you be keen to invest? Did I not know that I was opening up a can of worms that would just, that we're still kind of ramifications of today. So we first tried the most simple approach, which was, hey, let's just go create an entity outside, because they were like, hey, this is the best way for us to do it. Quickly realizing that this is going to take a lot of work, a lot of money, a lot of investment. So we said to them, no, okay, instead just invest in our South African entity. Yeah, that was also just like another can of worms that we opened up. I remember the first email that we got, Saab was like, you must adhere to BOP, like code BOP23. And I'm like, I have no clue what you're talking about. And as a founder I'm trying to raise funds, but at the same time, I'm really trying to run the company, right? I don't have time to sit down and research all these BOP codes and all these kinds of things. So it made it really difficult for us to get this over the line. And to be honest, it nearly scared away the investors, because Saab was sending them all these documents that they had to fill in, and I was having to get all the approvals, and then we're like, okay, cool, this is the vehicle that we're going to have to use, this is that, because at the time they were doing a convertible note. It wasn't straight equity into the company. And so a lot of startups either do a safe or convertible note. And trying to explain to Saab what this actually was also just a nightmare, like on its own. And so we eventually, fortunately, did get the funding, and they ended up investing in our South African entity. However, we feel the ramifications of that every single year. Whenever we have to submit any of our financial statements, like we're like a small little startup, right? Well, small little startup. And we have to go and get our financial statements independently reviewed. And even once they're independently reviewed, then you have to sit with the independent reviewers and kind of convince them that, like, no, guys, the structure makes sense. This is what we're doing. So it's just been an absolute nightmare trying to raise funding from outside investment, which is quite sad, because obviously, like, especially with our startup, we're trying to help people get jobs in South Africa. I mean, like, our youth unemployment rate is like 61%. And so running into so many of these hurdles, trying to really build the startup has been not the greatest experience, and it could make life a lot easier. And I'm just like one of many other startups that have had to experience this.
No, and I think you raise an excellent point, and that's, I want to say, the fundamental reason why we as a startup community in South Africa are looking to have these pieces of legislation shifted. And I suppose when it comes down to it, it's just the relative cost of building a startup here in South Africa relative to if you were in Tunisia, or if you were in Kenya, or if you were in Nigeria, or now if you were in Rwanda or Morocco or Egypt, where the regulatory hurdles that are in front of those startups are much lower than what we face in South Africa. So Adrian, I'm gonna ask you to talk through those, but just to sort of share with the audience on this point that was raised is, what is in there for South Africa Inc. if we were to shift these three policies that Adrian spoke about, to make it easier for our IP to be transferred internationally, be able to, move your company and have your HQ, or set up a HQ offshore that buys then the IP from your South Africa business, and then not be faced with a capital gains tax. What that would mean for South Africa is, like Bubu was saying, all of the entrepreneurs could rather focus on the growth of their business than worrying about this paperwork and years of discussions with Excon and Saab. And what that effectively means is that on an annual basis, we estimate about 200,000 incremental jobs. So over a 5-year period, it's 1.1 million. Likewise, you have an incredible increase in the GDP due to revenue growth over a 5-year period. That's somewhere around 900 billion. And likewise, when you're looking at FDIs coming in, it's about 450 billion. So it's huge, huge numbers that we're talking about being added to our economy incrementally. And that's all off the back of private capital and international capital flowing into South Africa. So I want to say we'll keep working hard to get this done. It's not like we need budgets, it's just like we need some time in national treasury and the right level of lobbying. So Adrian, just with that, I just wanted to ask you if you could talk through some sort of real examples of businesses that you've worked with that have faced these exchange control hurdles? I mean, us as Endeavour, we work with, Intersect, Wirestalk, Senmark, Clickatel. All of them have gone through this process of setting up an international HQ, shifting their IP to attract the right global VC funds to invest in their business, to keep growing their businesses and their South Africa operations, which sell to the global market. But walk us through some examples, because I think there's some bad stories and there's some better stories, but all of them are quite tough, I think. So, yeah.
Well, I just want to jump in and follow directly on from your point, Alison, which is what would startup owners be doing if they didn't have to be so focused on exchange controls? And I feel the same way, because our law firm is a venture capital law firm, and then focusing on taking that funds, growing our clients so we can make nice big fat fees in selling them. I don't really want to spend 2/3 of my time, which is what I'm doing now, on exchange controls. It's an artificial additional legal and regulatory costs that all our clients face. And that's the problem. The problem is that this is not a challenge faced by the competition in other countries. So when your same international investor is looking at a similar competitive company to you to invest into, and they're looking at a country X and they don't have exchange controls, and then they have to be explained by you and your excellent lawyer what exchange controls mean for your structure, they say, oh, we don't need to do this in Egypt. I think maybe it's just not worth like the light's not worth the candle. So that's the first obvious big issue. Despite that, our entrepreneurs are so amazing, we still win that competition often. But then they have to go hat in hand to the investors and say, part of your money needs to be spent solving this problem. So you've got the investor over the hurdle of exchange controls and all the issues, and then you said, insult to injury, can you please reuse your money to solve this problem? So then, for example, one of those solutions is that cash needs to be used to buy the South African company, but the investor says, well, hang on, I don't want this cash to be lost. This cash must come back into the group and be used to fund the group's operations. And then you have to build in an escrow arrangement. And I can't name names specifically, although Alison named a group there, all of which we act for. So to protect the innocent, I don't want to name them, but really what we have to do is structure these massively intricate transactions, overlaying already a complicated investment transaction, which satisfies the investor that their cash will not be locked into South Africa, that the cash will be available for global operations, won't face exchange control risks, won't face the hopefully artificial risk of expropriation, all that sort of thing. So the impediment is real. We recently did a transaction, a £7 million investment into a startup. That's a massive amount of money, huge. It's going to add huge rocket fuel to this company. They had to wait an extra 8 months to get that cash because of this problem. That's completely unacceptable. In a fast-moving world, most transactions fail if they don't close within 3 to 6 months. Just global dynamics means that something's going to happen, which is going to make it less attractive to investors.
No, great. Thanks so much, Adrian. And I just want to say to the audience, please, if you want to ask questions as we're going, please feel free. Just raise your hand. And then between myself and whether it's Tracy or Vangi, we will direct the mic to you for you to ask your question. And just when you're asking your question, you can either type it in the chat and then we'll read it out, or else you can introduce yourself and we'll put you up on screen. You can have a conversation directly with us. But I just wanted to encourage the audience to ask questions as we go, because we're also wanting to use this time to share learnings with the entrepreneurs in the room, or if there are investors in the room that are looking at how best to structure a raise or get around some of these exchange controls to expedite the business's growth. Now is a good time to also ask for some advice or clarity. Okay, so then Brian, I just wanted to go on to you. So just when you're working with these businesses and assisting them with moving their IP offshore, how involved do you get in your team, or what's the advice that you give to your businesses when they're at that phase of growth, when they really are looking to expand internationally, attract international capital, and with that need to move their IP?
Right. Thanks, Alison. Let me narrow my my input to the small matter of IP disposal offshore, because that is an asset against which we invest and nothing else, quite frankly. Whilst I acknowledge that the exchange controls is a much broader concept, I'm only going to speak to their effect in relation to IP transactions. So one has to think about the requirements. What is the procedural requirements? What are we dealing with? So first of all, you, as a natural or a juristic person in the Republic of South Africa, you don't do that directly. Adrian will know this. You go through your bank. So basically, the Reserve Bank operates through what we call the authorized dealers, and that can be any registered commercial bank in the Republic of South Africa. You are now starting to introduce costs, right? And to do that, you must be able to furnish your middleman, that is your commercial bank, who speaks to the Reserve Bank on your behalf with the reasons for assignment, right? Explain to the bank, who must in turn explain to the Reserve Bank why you want to do this. And it's important as part of that disclosure to speak to what payment arrangements underpin the transfer of that IP. Now, let me illuminate on this point, if you allow me. Startups are startups because they are selling hope in the main. So the commercial certainty typically will be very low. Right there and then, you have a very difficult hurdle to get around, because the philosophical underpinning for having this is flight of capital mitigation. Now, IP ought not have been part of how capital is defined for these purposes. For example, the requirements govern both registered, your patents, designs, trademarks, and unregistered. I don't want to stir up controversy, but natural human nature reminds us that for those IP rights which are unregistered, what incentives do they have to follow these rules? Now, what that means practically, without stirring up controversy, as I say, is that it opens us up to a concept of IP leakage, where the residents are actually incentivized to just let it slip through the borders without saying or doing anything. And how else are you going to know if the rights were not registered in the first place? Because of IP leakage, we are effectively losing unquantified economic value. We're effectively losing the people like Bubu that actually are the job creators to economies which are more progressive. Is it okay if I leave it there for now?
Yes, absolutely. And I want to say, like, really well said. And it moves very nicely into the next question, because my next question was really for Bubu to talk to us about what would it mean if some of these impediments weren't there. One, personally for him and Joe Box, like what would, the last year or 2 years of his business life have looked like if we had, a more supportive regulatory system, specifically on IP exchange control and that CGT. And then secondly, also just experiences that you see from other entrepreneurs who, potentially have not chosen to set up their business immediately from the get-go internationally to avoid these pieces of legislation altogether.
Yeah, actually, I was talking to a friend of mine last week, and we were just chatting. I'm helping them out with another project. And then he's just started this entity. And I was like, man, it's so cool. How's everything been going? And he was like, yeah, it's been great, man. Then I told him, hey, I'm going to be on this panel next week. And then he said, oh, that's incredible, because it's his second startup. And this time, instead of setting up the entity here in South Africa as his first entity, he actually just went and set up a Delaware C Corp. Because he just said, the last time I had to set up an entity in SA and tried to raise funding, it was just too much of a headache. So immediately, his first step with his new startup, and now obviously second-time founders are just more investable because they've made stupid mistakes that first-time founders aren't going to make. And now we're losing an incredible company. They're doing some really, really cool stuff. I won't divulge into too much of what they're doing, but they're doing some really cutting-edge stuff in the space of AI. And they've got a Delaware C Corp set up because he just said, I just don't want to do this anymore. And I think that's kind of like the effect of what is happening. As I said earlier, starting a startup is the most difficult thing that you can probably try and do. And if the environment doesn't allow you to be able to do this more easily, it just causes you to either A, give up, which a lot of people tend to do, which is incredibly sad, or B, we just keep on fighting. And why do we keep on fighting? Is because that's the South African tenacity, that's the South African spirit, which we're going to keep on fighting. And we then find ourselves in situations where we are not actually fighting the fight that we need to be fighting. We're fighting fights that are not actually helping us grow our businesses. And if in the last 2 years we had actually not been able, if we'd been able to have much easier support in regulatory in the regulatory space, I cannot even begin to imagine where we would be. We truly do have a massive issue around trying to raise funding with regards to the kind of stage that we're at. So we are like kind of in like the post-seed stage. And I was actually listening to a podcast a few days ago. And in Europe, there's a lot of funding going around for the post-seed stage, even more than America so at this point in time. And so then when we think about having to set up another entity and trying to do all of those things, it's just like, this is not worth the time. So let's try and buckle down and focus here. But that could potentially mean that we're not able to raise that next round of funding. We're not able to expand. And a lot of the time, the South African founders aren't just solving like some little tiny problem. We're solving a global problem that can really do, like we really believe our startups can play on the global stage. And so we really do need the support and be able to play in that global stage. And if more support is given, I truly believe you won't just see a couple of South African startups doing incredibly well, like go on. You'll see just so many more, because I work with founders. Like that's our biggest customer base of founders. I'm part of so many communities, and you see the passion that these people have, and you see the work that they're doing. And you just say to yourself, if the support was just this much better, if the environment was just easier to do the things that they could do, we could be literally the #1 startup ecosystem within the continent. And that's really what we need to do. And that's why this is so important.
No, I totally agree with you. And when you look at the ingenuity and the innovativeness and the resilience combined with the strong talent in tech skills and problem-solving skills that South African entrepreneurs have, and the market that we operate in, which has got really large, sophisticated corporates here in South Africa. In addition, we've got a very large mass market and fragmented lower end of the market and consumer base, both of which are incredible customer bases or revenue generators for, if you're on the one end a SaaS business, enterprise software sales, or on the other end, if you a solution that's for the mass market consumer in Africa. And we all know what the macroeconomics in Africa are looking like, and with tech, with increased digitization, and now with the fintech and payment platforms that are coming, it enables all the rest of the tech solutions to be built on top of that and to reach a much wider audience at a much lower price. So it's really exciting what the potential revenue is and the potential markets that these tech businesses in South Africa can go and address. So then, Adrian, just from what you've seen, and again, don't need to share names of companies, but really, like, what are the examples in the businesses that you've worked with in the last couple of years to say, hey, if that founder wasn't needing to spend these 6 months doing this work, they would have done X, or they would have raised from a profile of a VC like Y, or what would be different in your mind in where these entrepreneurs and South Africa would be without these limitations that we face?
Sure, Alison. I'm going to echo Bubu here because I want to emphasize what he said. We have an impediment. South Africa has had a handicap and an impediment to achieve one simple thing, and that's to demonstrate our value on equal terms to any other equivalent startup around the world. We have equal, if not greater. But what comes with our challenges is a discount. So they're seen to have even less value. And then it's hard to exploit and commercialize that value in the global markets because of these issues. So remove these impediments, and we have the specific advantage of speed. We are uniquely fast as a country of entrepreneurs. We make things happen. We make a plan. We get things done. And we're getting it done despite having this heavyweight handicap tied to our legs. So speed and cost of funding would be the critical thing. Speed is all important in a startup that has limited financial oxygen. Eventually, it's going to run out, right? And unfortunately, we're suffocating them with these impediments. And finally, they wouldn't have to go hat in hand to foreign investors asking them to help solve these problems. They'd be able to present themselves proudly as having already solved them, because that's what we've done. And when we do get clients through all these hoops and solve the problem through the process I've explained, they can present their companies with materially higher valuations, which means they give away less equity in return for their investment, and they make more money in the long run, which helps everyone.
No, great, thanks so much. And I think the point just in that is is as these businesses are moving and offshoring, the South African investors, they're staying South African taxpayers. So, you know, come end of the day, because when you do it through a share swap, you remain as a South Africa investor, whether you're an entrepreneur or if you just are a pure investor. And then that benefits the fiscus even further compared to if you were to buy back your investment as a South Africa with offshore capital. So that I think just makes it far better for the South Africa ecosystem. So then,
that's a critical point, Alison. That's a critical point. I thought it was a bit complicated, but you're absolutely right. Because exchange controls demand that the South Africans sell their shares in their South African company to an offshore company, it incentivizes that South African to say, well, if I'm selling my shares, if I've got to pay capital gains tax in South Africa, if I've got to raise this cash to, you know, embarrassingly, to buy my own money and send the money back off again, what's to incentivize me to hold my shares in the offshore company in my personal capacity as opposed to in some tax haven jurisdiction through a trust? And that denies us as South African from the future value of capital gains tax when I sell my Elon Musk type company. You know, when he's listed on the New York Stock Exchange, you know, he won't, because he's amazing, but other people will be incentivized to avoid that tax because it's actually just maths. Anyway, enough of that.
No, precisely. But Brian, then I think that sort of was the segue to ask for you to share on assisting us to effectively commercialize our IP, the IP that we develop here in South Africa. And of course, that IP has got much more value when it's being invested in by the global capital markets, because the global capital markets, that's where the money sits in venture capital, and that's who've got pockets that are deep enough to really pay the right price, that market value price that we're looking for as tech entrepreneurs. So just talk us through what what it would mean for us to really effectively commercialize the IP that's developed here if we didn't have these restrictive policies.
Yeah. So now fundamentally, the exchange control requirement in relation to IP is an artificial construct, and allow me to illuminate on this. The IP rights are by nature are territorial. What that means is that if I have an invention for which I file a patent in the Republic of South Africa, and I identify destination markets around the world, take US and UK, for example, that patent is only enforceable in that destination market. In other words, if you look at what the exchange control regulations are saying, there's a prohibition in relation to exporting of local capital, which is broadly defined to include intellectual property. There's a deficiency in that legal requirement, and here it is. The US right, when transferred by the RSA owner of that right to any other recipient anywhere on the globe, cannot be deemed to be transfer of RSA capital. Where is the sense in that? There's none. Because it's a right, useful, enforceable in that foreign territory. It's almost the same as I, as a South African, transferring a house I own somewhere overseas, and it's not subjected to the same requirement. So fundamentally, there's a flaw in that requirement, and it has the effect of limiting trade. Let me also say that the South African capital markets, as you quite correctly say, it's dominated by the private equity players, and the venture capital market is actually poorly or underdeveloped, which means that some sectors are more affected than others. There are just sectors where it's a non-startup to be trying to develop something that requires $1 billion. Down here at the tip of Africa, it's really not practical. So you need to be in close proximity with the sources of capital that speak to the high value nature of what you are doing. So this is artificial. We need to lobby strongly and involve more people that perhaps we've been able to reach out to make sure that in the interest of job creation, in the interest of economic growth, we need rules that are consistent with that mission, not what we have at the moment. I must say that the Reserve Bank is not the only hurdle to that. There's quite a few, but for the purpose of this discussion, we need a stronger voice, as I say, than perhaps we have had in the past. We need to bring to the party the Reserve Bank in this conversation. Alison, I may be wrong, but I haven't spotted any person here from the Reserve Bank. Again, to the point that I'm making, let's bring those voices here and debate these issues with them.
No, great point, and I absolutely agree. We need someone from the Reserve Bank in the discussion because the decision making sits between them and with National Treasury, and they've got joint accountability on these pieces of legislation, and we need both those sides. But I think the departments between Department of Science and Innovation and Small Business Development Department, those are the departments to lead the discussions towards National Treasury and SARB, because those are the areas within our South African government that are really focused on job creation. And then we know that through this high growth sector, changing these three policies doesn't require any capital or any budget from National Treasury. So it's just, it will only have positive benefit. And all of these high growth entrepreneurs, the employees in these teams, pay PAYE. As you move your shares offshore, if you do it through a share swap, you remain as a South Africa investor. So therefore, the South Africa fiscus will still benefit from a much higher capital gains tax flow on exit at a later stage, rather than on the day that you move your company offshore when you're only raising your Series A, which is really early on in your journey as an entrepreneur. So I want to say I hear you fully, Brian, on increasing the level and the momentum behind the discussions with Treasury and with SARB. Let's do it, and great to have you with us in those conversations. Yeah, so Bubu, just before I'm handing over to the audience and opening up to the floor with questions, just wanted to ask you a final question on, when you look at, other markets in Africa, when you look at other areas in, globally, London, Netherlands, the US, Delaware, Singapore, what would be the sort of the rule book that you'd like us to have here in South Africa to simplify, from a regulatory perspective, to simplify your growth path? What would that look like? And then, we'll just make sure that we go with that voice very strongly when we're talking to National Treasury and SARB.
Alison, a few months ago, I was having a really good conversation with a friend of mine. Not all my friends are founders. I do have non-founder friends.
Normal friends.
Yeah, I do have normal friends who aren't crazy. And we had a really interesting conversation. And the base of it was, what is the defining difference between a South African startup and a startup that's in Silicon Valley, for example? And it wasn't that they're smarter than us, or that they are, they've got better ways to think about solving the problems. It was just that their time to be able to mess up and figure out what is the way that they need to solve this problem is much longer than a South African startup. And that's because they've just got access to boatloads of funding, right? Which allows them to just go get the funding, go figure the thing out, and then come back to the investors like 18 months later, and tell them like, look, we think we figured it out, but we just need a little bit more funding to, validate some things. That level is not applicable to South African startups. You have to have figured that out in the first 3 months. And if you don't, the chances of you being able to raise a follow-on funding are very low. And I think the environment that we need to create is an environment like the other startup ecosystems that have actually been able to loosen the reins and allowed us to be able to get the outside funding, allowed us to actually have a document that is put into legislation. That doesn't mean that, okay, cool, when one party switches to another party that, oh no, startups aren't no, this thing is actually promulgated into law that we are going to support these startups, that we are going to have a definition of what a startup is. We are going to incentivize people to actually put money into these startups. And we're going to make the regulatory space easier for these guys to navigate it. We're going to get companies and state-owned enterprises to be able to invest in these startups in a much easier way. Because guys, the future, unfortunately, is startups. The future is technology. The future is data. And a lot of these tech startups are at the forefront of that. And if we're not able to assist founders, if we're not able to make things in life easier, we are going to be left behind. And so I really do believe that it's so important for us to be able to find ways to assist, not just me. I've gotten pretty far in the journey, and we've been fortunate enough to be able to do that. There are a lot of other startups which are just starting out trying to make that difference. And there are those startups who are on the cusp of greatness. And if we can just assist them a bit more, the country would definitely change.
Super. Thanks so much. I mean, I want to say it's wonderful to hear all the practical examples and the barriers that you've all shared, and also Tia, Brian, to hear from you from Tia on the journey that you walk with these entrepreneurs, investing with them at a really early stage, when pre-revenue, when there's just an idea. And great to be to see you sitting on the panel together with one of the businesses that you've invested in. I want to say, and thank you very much, Adrian. I mean, you work with a number of businesses that are in Endeavour's portfolio, and it's incredible to have advice and see advice that your team shares with them to navigate these really tricky steps with setting up the international businesses. Just a call for everyone that's out there, that's dialed in. I think most of you have probably already signed up to join the South Africa Startup Movement. But what really assists us when we're having discussions with National Treasury and with SARB is when they see the number of entrepreneurs, investors, and South African citizens that are behind having these policies amended. So if you haven't already signed up to just support this move to get our policies related to the startups to be at least in line with our African neighbors, and much more aligned with the global standards. Would love to have you guys to sign up, so please do that. Wangi, thanks so much for putting the link in the chat so all of you guys can see it. It's up there. And then just for everyone in the room, I don't know if there are any questions that you've got. If not, I'll just ask the panel for some closing comments, and then we'll dial off. But just a quick ask to the audience if there are any specific questions that you want to ask. Maybe you're busy externalizing or setting up your global HQ right now and having some issues with, there we go. Bangi, I can see you've got a hand up. Okay, you put it down. But if anyone's wanting to ask questions on authorized dealers, like who are the authorized dealers to get in touch with, what are the best ways to navigate that space, also here to assist. Okay, so there are no questions. So maybe just as a closing comment from Adrian, Bubu, and Brian, I just wanted to ask you if there's one thing that you'd like to leave the audience with today to think about, or to just see if they include others. Potentially it's include others to get behind the startup movement, not sure, but if you can just have one closing thought, and then just want to say thanks so much for joining after that. So Adrian, over to you first.
Yeah, thanks, Alison. There was an amazing research report done last year on the effects of the negative regulations on immigration, actually, which is obviously on everyone's minds. And we just want to emphasize that you don't need to immigrate to raise funding offshore. You can certainly do that. You can create offshore holding company structures. You need to jump through some hoops, but you can continue to drink the world's best wine, watch the world's best rugby team. But in all seriousness, most of our clients don't need to do that. So just be aware of that knee-jerk reaction, which is obviously very negative on our country and our economy. Thanks, that's all from me.
Great, then Brian, to you.
Yeah, thanks, Alison. So my parting shot, the fundamental fact is that big business is not the source of new jobs, right? And big shout out to all the big business people, but they actually kill new jobs, right? So for us to eat away at one of the biggest social ills we are faced with, which is the joblessness, we need startup companies, because the experience over time brings with it the jobs that we need. Entrepreneurship, we deal with it on a daily basis. It's hard enough, and without all these artificial problems. So we need to be putting in more focus in terms of how to make this a lot more easier than it is at the moment. That's all I'm going to say. Thank you so much, and thanks to the panel as well.
Yeah. Bubu.
I just want to touch on something that Adrian said earlier. A week in the life of a startup is basically a lifetime. 8 months, that's an eternity. So we do really need to find ways to shorten the time that founders have to wait for these things to get through, and so that they can focus on doing what they do best, and that's building incredible, world-changing startups.
No, fantastic. And maybe just to close with one stat, and it's just to try and bring this job creation to life. So as Endeavour in South Africa, we probably work here with 100 high-growth startups. All of them are 10 million rand in annual revenue and above. So relatively, Series A, or they've got good product market fit. We've got a fund that invests in a subset of those businesses. And just to call out the stats, we've invested so far in 17 of those 60 businesses. In the past year alone, those businesses have delivered 127% year-on-year growth rate in revenue. Okay, and these are businesses from anywhere between 10 million rand to 2 billion rand in annual revenue. That's the simple average growth rate. And then the job creation of these businesses is running at a simple average of 97%. Okay, which is incredible. Okay, it's not weighted average. So the larger businesses grow at a slightly slower pace, but the smaller businesses grow at a faster pace. But then if you look into that job creation, the job creation is more than 50%. It's more than 70% Black South African youth that are being employed. And then when you look at what capital they raised, 95% of the venture capital that these businesses raised was from the international markets. And when the businesses are larger, like Series B, then 99% of the capital that they're raising is from the international market. So what message I want to leave us with is the capital is out there internationally for us to go and access. What it's doing is it's moving to South Africa and creating jobs here in South Africa, because these high growth businesses have their HQs offshore in Delaware or UK, but they keep their operational teams here in South Africa. But the strategy and the leadership of the business needs to sit overseas for the IP to be held there. But the job creation in South Africa is immense. And over and above that, people tend to stay in these businesses at the lower level of the more junior level of jobs 2 or 3 years, and then they go on to do more and better things. So not only is it creating jobs in these businesses, but there are those individuals are being upskilled in digital skills, and then they go on to do more and better things. So I want to say thanks so much to the panel. You guys are all working in this space day in and day out. It's an incredibly exciting sector to work in. There's amazing amounts of growth and positiveness. You've got a huge dose of resilience to have stuck it out, but it's definitely worth it because of the results that we're seeing, albeit in spite of the legislation. So thanks for your time. And for all of those of you who are listening, please, if you haven't signed up to the Startup app, sign up. And if you've got stories to share and you're an entrepreneur, please just get in touch with myself or Bongi and share your stories, because the more worked examples we have to put in front of Treasury and SARB to explain, the positive benefits that we could contribute to our economy in these conversations, the better. Thanks so much, everyone. Enjoy the rest of your
Thank you,
Thank you, everyone. Goodbye.
Cheers, everyone. Bye.
Bye.